You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 11/29/21. Well, we saw a real Black Friday event, not just people killing each other in the aisles of Walmart and Target and Best Buy, but we saw the market have a major meltdown. Really surprising, the worst decline in 70 years during a Black Friday, a day after Thanksgiving. And well, here to give us his opinion on it is our good friend Jeffrey Small. Jeff, financial expert. So is it time to flee the market, or is this just another variant of financial disruption, dislocation, and the market will soon correct itself?
Well, Kerry, thank you for having me on your show. It's been a while since I've spoken with you, so it's great to be back. I think the market's reaction on Friday was rather a knee-jerk reaction to the unknown. Of course, it had no idea that, Europe was going to shut down the border and airline traffic to South Africa and several other African countries. And then we followed suit late Friday afternoon. And so markets don't like uncertainty. And so today, we're going to see the market probably bounce back over the next couple of weeks, as this disruption probably is not going to mean very much, since we've been living with the virus since March of 2020.
All right, so this is a temporary thing. Well, you know what we say, the best things in life are transitory, Jeff.
Is that a pun into inflation? Because inflation is not transitory right now. We're all feeling it in our pockets. Things cost a lot more. But with inflation comes earnings growth, which is generally good for the markets, Kerry.
True. I agree with you there. But, let's look at this thing. Yes, you can make a lot of money in inflationary times. And if you stay where you are, you're doing pretty well. If you make real returns, you're doing amazing. What do? How do you play the inflationary card? How do you make wealth from what is apparently a negative trend?
Well, I think obviously what we have to do as investors, and for your listenership, we really need to buy companies that we know are going to have earnings growth. And of course, that's the key. I mean, the present value of stocks is based on the future value of all cash flow. However, we want to buy companies that we know are going to have good cash flow going forward. And so that's generally the best of breed. Things like the FANG stocks, which basically is Facebook, Apple, Amazon, Netflix, and Google. Those companies will all do well no matter what happens with or without any COVID alarms that are going to go off in the near term or long-term future.
Okay, so pretty much they're going to be beneficiaries of inflation, in other words, right?
They are going to be beneficiaries of inflation. But, mild inflation is good for the markets. It's good for earnings, and that causes, revenue and profits to increase because people spend more money. Things cost more. The profit margins generally can go up. But the inflation that we're having now is a little too excessive and will hurt the GDP growth anywhere from 1 to 1.5% over the next 12 months, because things are, if you noticed, costing a lot more at the grocery store, a lot more at the pump, and goods are costing more. So right now, Kerry, we're seeing a shift once we get past the holiday season of folks purchasing goods to folks really purchasing more of a services-based spend. And so we're going to see that actually kind of deflate next year. Probably by this time next year, inflation will be back to 2%, assuming oil doesn't go to $100 a barrel. And oil, I'm predicting, will go to $100 a barrel over the next 12 months.
You think $100 a barrel? And I'm kind of inclined to agree with you there, Jeff, but that could have devastating effects on the economy, couldn't it?
It will have a devastating effect on the economy because, that does not help the economy, does not help earnings, does not help the ability to spend free cash flow. As consumers, we're going to have less and less money over time. And so that's a big problem going forward. But we're in an energy-based economy, Kerry, and everything is dependent upon the price of oil. I remember the good old days when oil was $32 a barrel back on November 2nd of 2020. That was a really great price. There is no reason why oil should be priced where it's at today other than the restrictive measures that have been put on the energy industry at this time.
Okay, so that's having an effect there. I mean, just a year ago, we were pretty much energy independent, and all that changed in such a short period of time.
It really did. Oil is, we have a boundless supply of it here, but oil prices will continue to rise as long as the government puts brakes on what's available. And the government at this point, mainly the Biden administration, is directly responsible for oil trading at a high of $84 a barrel just here a month or two ago. And so right now it's creeping back up into the $80 range, but we do see it going to 100 before this time next year.
Really? So that's going to have a lot of negative effects, isn't it?
Of course, it's going to have negative effects. It's not going to be good for the consumer. So I don't know how that helps the average everyday American. As a matter of fact, the people on the lowest end of the socioeconomic scale will pay the most by the increase of energy prices. They will have the biggest hit. And so why we want to penalize folks and, let's say under the $30,000 a year category of income makes no sense to me. I don't understand why we're doing that.
Yeah, well, join the club there. But, these things happen. Government causes a lot of problems here, and really all this kind of adding to a loss of faith in people's confidence in the government, isn't it?
Well, I think that's a big deal, the loss of faith. I mean, to buy a stock, you have to have faith in the company going, it's going to grow their revenue. It's going to be a positive bet for yourself. But, faith is a good thing. Everything begins in faith. Loss in faith of the country. I believe in the country. I believe in America. I think it's still one of the greatest places to raise capital. I just don't agree with some of the policies that are in place right now, Kerry.
Well, everything is cycles, though, right? So we had this cycle, and perhaps it's going to reverse. But problems underlying the country and the global financial system don't appear to be going anywhere soon, do they?
Well, they really don't, as we've become more dependent on the government and, let's say, monetary policy, monetary stimulus through the Federal Reserve banks, and then maybe fiscal policy from the administration or from Congress to lift up our economy. And so we've really become codependent on that. So now we're entering a new era where we printed up $7 trillion of money in 6 weeks in April of last year, the largest stimulus in history. And now that stimulus is being tapered down and is expected to be gone by June of next year. And those always present challenging environments for the markets to grow, Kerry, because we've had humongous amounts of asset price inflation through stocks and real estate based on that fiscal and monetary stimulus. So if that's gone, where do you think the economy is going to be without stimulus? Can it grow from here? Is that possible? Not really. When you have an aging population, you have demographics working against you, and you have more people leaving the workforce than are actually entering it. That becomes a very challenging environment for markets going forward, Kerry.
Right. So defensive stocks, are the tech stocks really defensive? Can you say that Tesla trading at the multiples it's trading at, even though it has phenomenal growth prospects, is really defensive here?
Don't just survive, thrive. The Financial Survival Network.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. At Silver One's Candelaria Mine project in Nevada, there is already a historic resource estimated at 127 million ounces of silver, which Silver One is developing and advancing. The company's Phoenix Silver project, located within the Arizona Silver Belt, is an early-stage exploration project on which native silver vein fragments have been discovered near surface. One grab sample assayed an astounding 14,688 ounces per ton. Yes, that's right, ounces, not grams. Silver One has tremendous exploration potential, is extremely leveraged to the price of silver, and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Tesla is more like a trend or a cult following because their valuations do not justify their pricing multiples do not justify when it's looking at their revenue. There's another car company like Ford or GM. I think the mystique behind Tesla is Elon Musk, who really appears to be so much smarter than everybody in the things he delivers. And so everyone's wondering, what's he going to do next? And, what's he got planned? And what's he thinking? Oh, and did you hear what he said? Nobody has said that before. So that's really what's driving the stock, besides their platform of assets from, being self-sufficient in home power or space. And, how do you value all of those things? You really can't, because he's doing things that nobody else has done.
Hey. Remember those old commercials, the E.F. Hutton commercials? When E.F. Hutton speaks, everybody listens. It should be now when Elon Musk tweets, everybody freaks, regardless of what he says.
He has become the visionary and futurized leader of a company, and that's ever exacted a humongous multiple on a stock price, because people buy into his visualization and his vision of the future. And even when he talks about Mars and repopulating the universe, and getting ahead of that curve, it's interesting. People just love everything he says. I mean, he's turning into a financial Jesus, so to speak, Kerry.
Yeah, well, so far so good, but we know that there's life cycles for everything, right? And he's just like he's in fashion now. Everybody's listening. He has a couple of well-publicized failures, and that's the end of all that.
Yeah, but boy, is he a great salesperson. Holy cow. He's really good at selling. He's done a great job of creating that mystique, and nobody can understand the valuation of his company right now. I don't even think Kathy Wood from ARK Investments understands it. And she was the first one to call Tesla, at 5,000 a share here at some point in the future.
Yeah, well, you could, the two things about forecasting, you can forecast the event or you can forecast the time it's going to happen. But when you forecast both, then you have problems. So she's leaving herself plenty of outs here.
I agree with that. She is, and she's taken a beating over the last year. So not every analyst or prognosticator gets it right. We make an educated guess based on statistics, and that's not exact science, Kerry.
No, it is not. So what about the consumer brands, the P&Gs, the Unilevers, all that? Regardless of what happens to the economy, people still buy their shaving cream, right?
Well, they do, and the consumer staples, of course, will always find a way to eke out a 5% rate of growth year over year. Those are value-based stocks, and those stocks generally will be more buoyant when things become more volatile. But, buyer beware, because the market is significantly overpriced, especially in the buyer space. We seem to be at a second highest plateau in history. We're really just about 10% below the .com valuation of January of 2000 on the CAPE index. And so when the market gets this overvalued and this disconnected, valuation-wise, you really have to be careful. And so I think what you do is you focus on things that have good earnings growth, combined with maybe good portfolios that generate high dividends and high yields. And those are the types of things you want to look for. It's very hard to do that. Not a lot of advisors specialize in that unless you have very big portfolios, 5 or 10 or 15 million or more.
All right. So another thing, we've got like a tax bill that's been lagging, kind of dying in Congress, but at some point it appears taxes will go higher. How big an effect is that going to have on the market?
I think it has a huge effect, especially on PE multiples, price to earnings multiples for the markets. Of course, if corporate taxes go up, multiples go up because less earnings go into the profits of the company and more into taxation, which makes no sense to make us the highest corporate tax rate in the world. Right now, we're directly even with China, so we don't want to incentivize companies. I don't understand why any politician from either side of the aisle would want to increase corporate taxes. That makes absolutely no sense. It will just be a regressive tax on the consumer. We will pay for that. That's been proven over and over again. That tax gets passed on to us, Kerry.
Oh, yeah. Well, death and taxes. And I could throw out a lot of quotes from the late, great H.L. Mencken about our politicians and your relationship to them, but you've heard them all before. So looking forward for the next 12 months, you think the market's going to recover? And we go back into tech and hope for the best?
I think the market will be carried by a few of the leaders, the best of breed tech stocks over the next 12 months. And I would be surprised if we have a positive return on the market next year. However, there will be a very small segment of the market that has that 20% to 15% plus earnings growth in the tech sector that will continue to do well, regardless of what the broader market does.
Okay. Jeff, people want to find out more about you. They want to go look at your work, see where you're heading on the web. Where do you go?
They can go to my website at arbor, ARBOR, like the tree, -financial.com. There's various tools there for folks. They can reach out to me if they want from that and get some better perspectives on how to create income or how to defensively posture going forward at this new market peak.
All right. There's a link in the show notes to this interview on Financial Survival Network. Make sure you go over there, sign up for your free newsletter. Jeff, always a pleasure. Thanks so much for coming by, and we will talk to you again. If you got a question for Jeff or myself, please, by all means, ship it off to KL@kerrylutz.com. Jeff, be well.
Thank you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.